So we have New Zealand trade balance coming out, and it's a monthly indicator, and it's coming out for the months of April out of New Zealand. And basically this particular indicator, as you know, trade balance is basically the difference between imports and exports, okay? And what they do is they subtract they subtract imports from the exports, and that's how you get the trade balance. So if the trade balance is negative, that means the imports are higher than export. If the trade balance is positive, that means the exports are bigger than the imports. The trade balance is calculated in New Zealand dollars. It's not units or anything like that. It's real dollars. And it's basically how much money was spent on imports, and how much money was spent on exports. Now the relationship to the currency value is pretty direct. I mean, hypothetically speaking, but actually obviously fundamentals do not drive the market. It's the people that drive the market, and it's people's perceptions of the fundamentals. So in this particular case, where we have the trade balance coming out, hypothetically speaking, when the exports are higher than imports, when the trade balance is better, people that are the country that's exporting, the country that buy the exports from the specific country, actually have to spend their money, and they have to exchange it into New Zealand dollars in order to buy the exports. So hypothetically speaking, demand for New Zealand dollars goes up. And on the other hand, when the imports are bigger than exports, when the country has to actually sell their currency and exchange it into the foreign currency in order to import something, so there's more selling of New Zealand dollars happens, and basically, hypothetically speaking, the value of the New Zealand dollar goes down. But the trade balance reports have been very, very difficult to trade. They're very volatile reports. They're almost worth skipping if you just look at the trade balance alone. And here's the reason for that. As you may know, there's a lot of talk and a lot of focus on inflation nowadays, and a lot of talk and a lot of focus on interest rates. Now remember, we have to consider exports and imports here. Now New Zealand was always considered as an export-heavy country because it used to export a lot of its natural resources and some livestock as well. And pretty much what's been happening is, in the recent years, because the New Zealand dollar has been so high, the New Zealanders have been able to afford a lot more foreign goods. So a lot of the internal consumer spending have been driving the economy. It hasn't been the exports alone like it's been 10 years ago. Right now the internal economy is very, very strong. The housing market is very strong, inflation is relatively high, consumers spend a lot of money, retail sales are high, businesses are doing well, etc. So all of a sudden now trade balances are looked at different in a different scope of life, in a different scope of light. If the exports are decreasing and the imports are increasing and the trade balance is negative, what many times happens is a quick spike and then a full retracement to the pre-release price. And the reason it's happening is the people are starting to think deeper, the traders, the bank traders, whatever, I mean the people that are moving the price, and they're thinking, well, the imports are higher, that means the internal economy is still doing well, that means that inflation may still climb and they may hike the rates. Therefore, this report was actually good for New Zealand dollar. So, you know, that is the situation. So the ideal situation here is for both imports and exports to come out higher, and the exports to come out slightly higher so that the trade balance is a little more positive. That would be the ideal situation to buy the New Zealand dollar. If the trade balance becomes positive but the imports drop, you know, substantially, and the exports don't do anything, what actually happened? What actually happened is that they imported less goods, which possibly means that there's less demand for them, and the economy is partially slowing, and the exports stayed the same. So there is this, you know, dance between imports and exports happening, and we have to take it all into consideration. So because of all this, I've set the triggers very, very conservative, okay? Last month we saw trade balance coming out 61 million positive. This month the expectations are about 10 million negative. Now when you're talking about trade balance, 10 million is really nothing. I mean, usually people think in terms of hundreds of millions and billions. So to make it very simple, I just put consensus as 0 because that's pretty much it. They are expecting 3.2 billion in exports, and they are expecting approximately 3.25 billion in imports. So, you know, like 50 more million in imports, whatever. So that's the situation. If for some reason trade balance shocks everyone and it comes out, you know, at 1 billion surplus, then obviously that would be good for the New Zealand dollar, and it would be a possible buy on NZD USD with a 10 pips limit triggers. There's no holy shit triggers on trade balance. We've seen trade balance doing absolutely insane things, like out of the US. We've seen it deviating by 5 billion and nothing happened, okay, or very little happened. So we have to be very, very conservative on this trade because it may be very unpredictable. On the other hand, if the trade balance comes out negative 1 billion, it would be a possible sell on NZD USD, and with a 10 pip limit trigger. I'm not even going to use a Wanda here, okay? All I'm going to use is I'm going to use my MB trading account. In fact, I need to start it off right now, and that's all I'll do. Just try to trade NZD USD on MB trading. I'll have my Wanda ready just in case we see some very good after spike opportunities and we can get a better price on a Wanda or something, which sometimes happen on New Zealand trades because the quotes on the MB trading and many other ECN platforms just freeze for a little while there. So I do have my NZD USD orders prepared there on a Wanda just in case, but I don't have a weapon set up. I'm not planning to trade them on spike or whatever. 20 seconds until the report, about 15 seconds. And again, I'll look at the imports and exports and I'll let you know what's going on there. 5 seconds. Okay, no trade. Okay, came out worse than expected. Okay, so we're seeing NZD USD going down a little bit here. It came out at negative 212 million. Let me just analyze here what the imports and export components are looking like. The imports came out significantly higher. Exports came out a little bit lower. So you see, that's very difficult to trade. The imports came out significantly higher. I mean, previous month it was at 3.27 billion. Okay, they came out at 3.39 billion. Then on the other hand, the exports came out lower at 3.18 billion versus 3.33 billion, but not much.